Is Generation Gamble the way to build wealth, or is it just dangerous and risky? Now, businesses are supposed to provide us with solutions to problems by providing us with goods and services that we need. But are stock trading businesses like Robinhood simply giving us what we want, or turning us into a generation of gamblers? Now, it's no doubt that technology has changed the world and profoundly changed the world of investing and, of course, and of gambling. And the millennials are being targeted the most right now. So in this video, I'm going to explain the rise of online gambling and investing, the reality of getting rich versus going bankrupt, the dark world of Wall Street and what they're doing, the coming SEC rules that are going to change and shift all of this, what you need to understand to protect yourself and profit instead of going bust. So let's go. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money, because almost everything that you have learned is wrong. And unfortunately, it's not just wrong, but it's intentionally being misleading you. Information is being left out so you don't know what's going on. And there's something deep and dark going on inside the world of inside the financial world, inside of Wall Street, that is targeting you, and it's turning you into a generation of gamblers, and that's not a good thing. So let's take a look at this. I want to show you, let's go ahead and jump right in. I want to show you this article that just came out on the Wall Street Journal, and it's talking about how investors are using Robinhood. Of course, it's the rise of Robinhood, you all know about that, and other platforms to jump into options trades, and this is starting to worry regulators. All right, now options contracts are now swapping, they're trading at the highest level on record, it says here, with retail traders making quarter of all the activity. So for the first time ever in history, options trading has surpassed stock trading or stock investing. Now, what's important to understand about this is that when you're buying a stock, typically you're buying a company, you're buying equity in a company. That's the way it should be. If a friend came over and asked you to invest into their business, you would ask, what is the business? What does the business do? How does it plan to make money? How do I plan to get my money back? And that's the same questions you should be asking before you buy a stock as well, because technically you're buying the company, right? You're buying equity in the company. However, options trading is not that at all. Options trading is basically betting on what the future price of that stock will be. It's completely different. One is gambling, one is betting, one is investing. Now, it's surpassed that. So options trading has now surpassed stock investing for the first time in history, which shows that we have this new generation of gamblers. I'm going to explain that to you in a little bit. But what's important to see here is that the regulators are starting to see this, and there's about to have some massive change that you need to know about. Now, it says the flood of everyday Americans into options trading has drawn the skeptical eye from U.S. regulators, who are now considering changing the rules. All right, now it says 39 million option contracts have changed hands. It's up 35% from last year. It's the highest level ever. And so what we've seen is that the rise of these apps, the rise of the gamification of these apps like Robinhood and then of course people losing their jobs, being sent stimulus money, being forced to stay at home, has seen an increase in this rise of investing / gambling. We can see that it used to be pretty difficult to get approval to do options trading because we had to be approved. There was like credit. They were basically extending credit to you. But what they've done is they've made the approval process very, very easy. They've made it easier than it is for other platforms. And that's one thing that regulators are seeing that's a problem that's created this surge. They've made it way too easy. So the first thing regulators are thinking about doing is changing the rule to make it more difficult for people to get in. Now, options, if you don't know what they are, like I said, it's basically betting on the future price. But it says here options give the holder the right, but not the obligation to buy or sell the underlying security. So like I said, they're not really buying it. They have the obligation or the opportunity to buy that. And so that's what we can see is happening right here. It's happening really, really fast. Now, one thing I want to bring up is like we can see here that retail traders can be lured into options trading because of the leverage, but the winners are almost always the lightning fast computers that are trading against them. And so is this a good thing or a bad thing? Should you be allowed to do this? Scott Sheridan here says that people should have the access to any trading tool in the toolbox as long as they have the money to meet the capital requirements. And so should you be allowed to? Should the SEC limit your options to get into options? Well, Maybe, maybe not. I think that we should be free to make our own decisions. However, not if the game is rigged against you, right? And that is the problem I think that the SEC has, because you could be lured into options trading because of the leverage, but the winners are almost always going to be the people trading in front of you, not you. And so should you be allowed to gamble if you want? Well, sure, but not if you're betting on a rigged game. So let's take a look at how rigged this game is. We can see here how Robinhood cashes in on the options boom. And so that comment before was talking about this high-speed trading, all right? So high-speed trading firms are paying brokers billions of dollars a year to execute options orders. And so basically, you're using your Robinhood broker, and then these high-speed trading firms are paying them billions of dollars to get that data and make money off of you. All right, this practice is called payment for order flow, and it's made options a cash cow for brokerages such as Robinhood Inc. So why does Robinhood want to make options available for every one of you and lead you into this generation gamble? Because they make billions. It's become a cash cow for them. Now, I've been investing most of my life, and typically you would have to pay to make to make an order. So when we saw the rise of E-Trade and TD Ameritrade, this online trading, you'd pay $10 per trade, then it went down to $5 per trade, and now it's $0 to make a trade. But of course, you've probably heard by now that if you are not paying for the product, you are the product. And this is exactly what happened. I used to have to pay to trade. Now I trade for free. I don't have to pay for the product. And that means that now I am the product. We can see here that Robinhood and TD Ameritrade make twice as much or more from selling their customers options orders as they do from selling order flow for stocks. So they're making a ton of money from doing this. They make about 60% higher than they take from selling equities orders. They make 60% more money selling your options to these companies than they would from selling securities. Now, we can see that this really came under scrutiny when this whole GameStop saga happened earlier in the year, and all these people jumped into this options market, and then we found out just how bad this is. And we can see here that critics say payment for order flow has reshaped brokers' business models to make them intent on juicing more trading activity from customers, sometimes through game-like smartphone apps. And so the critics are saying, look, and like even myself, sure, we should have the right to gamble if we want, right? And we're gonna take a look at that in a second. However, not into a rigged game. And so now the business models have changed where they're giving you the free trading, so you're the product now, so they can make massive profits, not just for themselves, but how are they making the profits? By selling the order flow to these other companies that are getting in front of you. We can see here, we can see why firms such as Citadel Securities, so Citadel was the company that was being targeted through this GameStop, so that name may ring a bell. So we can see firms such as Citadel and Susquehanna are market makers. So they're in the market, and that means that they're taking either side of the trade. Sort of like if you go to the casino, the house always wins. And so they are market makers. They're on both sides of the trade, making sure they're always going to make money. That means they trade stocks or options throughout the day and collect the difference between the buying and the selling price. All right, so they're in on every single trade. Now, should the security SEC be involved in this or not? Now, I want to show you a couple things. So here's the lottery, all right? How many of you think that you actually have a chance of winning the lottery, right? It's pretty much rigged against you, right? We can see here the odds of winning are so low that in 2014, Americans spent $70 billion on lottery tickets alone. That's more than the total of spending on music, books, sports teams, movies, and video games combined. And so that's okay. You can go spend $70 billion on lottery tickets, even though your chance of winning the lottery is almost zero, just better than zero. And yet that's perfectly okay. The SEC doesn't have a problem with that, which is pretty weird, probably because that puts money into their pockets. We can also see the gambling industry in the US has grown massive. We can see right here, the market size of the global casino and online gambling industry is $230 billion, which is massive as well. And what are your odds of winning at the casino, right? And so it's like, if the SEC doesn't have a problem with you gambling in the casino or gambling in the lottery, why do they care about gambling on options in Robinhood? And the reason why is because of the rigged nature of the game. At least in the lottery and at least in the casino, they tell you what your odds are of winning. But in Robinhood, they don't. They're working against you. They've rigged the game. Now, this is even a symbol of a much bigger problem that's happening. This is something I want to bring your attention to. And so we saw CNBC recently ran this documentary, which I've titled this video after, which is Generation Gamble. All right, now this is a big problem, and it's a sign of the times. All right, it's a sign of the end of this fiat money system. We're at the end of this 80-year cycle, and it's a sign of the times. So Generation Gamble, it says here, this documentary, Generation Gamble, was a look at the proliferation of online investing, crypto, and sports betting apps. So exactly what we're talking about, right? So all these apps have been coming out, making it game-like, making it fun, and they've encouraged a new generation to act more aggressively towards money and risk. And so now, I mean, the stock market's averaged a 6 to 8% return over the last 80 years. And now today, people come in and think they have to make 200% in 30 days. And they want to gamble, right? They want to put it all on the line. And this is part of the thing. It's also a result of the COVID-19 pandemic, because online activity increased dramatically, leading this Gen Z to reevaluate how it makes and uses money. All right, now that's a key piece I want to talk about, how it makes and uses money. So money is a medium of exchange. Money, we earn money by providing a valuable good or service to the market. So as a business owner, I'm not greedy. As a business owner, I'm a servant. As a business owner, I'm trying to find out what your problem or need is and then solve it. And by solving your problem or your need with a good or a service, I in turn get money, right? I'm generating wealth by solving problems, by creating goods and services. But what's happening in this environment today is a gambling environment. And so what's happening is you're trading options back and forth, back and forth, back and forth. You're trading cryptocurrency back and forth, back and forth. You're trading, but that doesn't provide any value to anything. You're not creating any good or service. There's no value creation that's being done. Now, by trading, you could increase your US dollar stack, and that's okay. But then you haven't created any value for the world, no goods or services. Then you take those US dollars, and then you go buy goods and services of people that are actually producing value. But the problem is that it's a net drain on the system. Now, I don't fault you for doing that. I don't fault myself for doing that. We are victims of the system. The fiat money system has robbed all value creation, and now some of the best way to get ahead, as it says here, leading Gen Z to reevaluate how it makes and uses money. Unfortunately, in today's environment, with most of the manufacturing offshore out of the United States, all we have is financial services. And so we are now a generation gambling. The best way to make money today is by trading and gambling on stocks and options and cryptocurrencies. I see over and over and over stories of people quitting their jobs so they can just be full-time traders. But there's no value that's being provided. And again, it's not your fault. It's just a sign of the times. Now we can see that these apps do have unseen dangers, and they do come with excessive risks. And so they turn it into a game and they suck you into it. But then, as I showed you, on the back end, you are the product, and they're actually robbing you of that. On top of that, we have this whole new group of young social media influencers and claimed cryptocurrency millionaires who share financial advice online with millions of followers. Now, I'm online sharing financial advice, but I'm more sharing my financial experience. I've gone through multiple boom and bust cycles. You've heard my story. I've made millions, I've lost millions, and I share all of that perspective with you. But today you have 18-year-old kids that have no experience and no perspective in life, and they're shilling you the next hot options contract or cryptocurrency to buy, and it's sucking more and more and more people into this. And we can see that there's massive potential downsides to this, not just of losing the money. We've seen the greatest, or I should say the worst loss, which is human life, unfortunately, has happened. But it's also investing behavior that leads to addictions. As a matter of fact, 4 million Americans are suffering from compulsive gambling disorder. All right, so this is a big problem. I just want you to be aware that while the SEC is looking into this, I don't think they should tell us what we can do with our money. If we can gamble in the lottery or in sports betting or whatever, then we should be able to do whatever we want. However, you do need to know that the game is rigged against you. If you are not buying the product, then you are the product yourself. And it's a sign of the times. It's a sign that the end of this 80-year credit cycle is about to be over and the game is about to be reset. What do you think? Do you think that gambling is the sign of the times and it's just you got to do what you got to do? Or do you see it as a big sign of a problem? Leave me a comment and let me know what you think about that. I'd love to hear your opinion on this topic. And that's what I got for you today. All right? To your success. I'm out.